Hello and welcome. I'm Ryan O'Donnell, co-founder of the O'Donnell Group, and this is Straight from the Hip. Today I want to talk to you guys about becoming a successful investor in the midst of volatility. And to do that, I'm going to share with you a story I just made up called the 11-Year Vacation. So there's been a lot of volatility over the last few months, especially in the U.S. stock market. In fact, in the first part of this year, up and through about September, the markets were up 8% or so. All the headlines are pretty positive. The markets are doing well, unemployment's low, GDP growth is strong. And then at the end of September, the market started going down. And since that point, they've come down about 15%, giving up all the gains. And it looks like they're going to finish in negative territory, probably somewhere in the 7% range for all of 2018. Now that recent volatility, you can imagine all the headlines on every major website and newspaper. The bear market is back. The recession is coming. I mean, everything is negative. So it's really hard, I think, to stay positive, to not panic, and to do what you need to do to be successful, and that is avoid the noise. It's something that we talk about a lot around here, avoiding the noise. Because in order to become a successful investor, in order to have a positive investment experience, we need to have an investment philosophy that we believe in, and we need to be disciplined. Disciplined to stick with that investment philosophy and disciplined to avoid the noise. So this story about the 11-year vacation. Let's imagine back in 2007, it's July, and you had just sold your company for $1 million. The stock market has been doing great since the crash of 2000. And in July of 2007, you put $1 million into the stock market. The market's at an all-time high. And you decide you're going to go on a vacation for 11 years. You're going to bury yourself in a cave. You're going to go to Greece. You're not going to open up a newspaper. You're not going to check anything out. Just completely unplug. You wake up today, December 28th. You decide, I'm going to hop online. I'm going to see what the news of the day is. There's probably going to be some pretty shocking things you have missed. You missed that Lehman Brothers went bankrupt. You missed the entire Great Recession, which, remember, was the greatest recession since the Great Depression. The capital markets froze. The real estate market crashed. We're now involved in a trade war with China. A lot of things have happened. But you decide to look at your investment account. Remember, you put $1 million in there and didn't touch it for 11 years. You look down and you realize, that's not bad. I averaged 6%. I doubled my money. I now have $2 million there. It wasn't quite the 9% that I was hoping for, but geez, there were a lot of bad things that had happened. A lot of things that would spook a lot of investors. But to go through all of that, being patient, being disciplined, understanding that in order to get 7 or 8% returns, we have to live through volatility. That's the risk that we have to be willing to face. And so I know it's painful right now over the last couple of months to watch the markets drop. And we're invested globally, so we see not only the U.S. markets dropping, but we see the international markets dropping as well. It's important to note, though, that, well, we think you will have the best outcome by avoiding the noise. There are things that we do behind the scenes, like rebalancing your portfolio, buying more stocks as the markets drop, which puts us in a better position when the markets rebound. Things like this and other ways we structure your portfolio, we believe will lead to a positive investor outcome long term. Now, I'm happy to talk over any questions that you might have. Please feel free to email them or call me. I hope you all had a great Christmas. Looking forward to a fantastic 2019. And we will recap the year, probably, like I say, sometime at the end of January, early February. Again, I'm Ryan O'Donnell, and thanks for watching.